Hey everyone, and welcome to the Market Adventure, where you'll learn everything about money and personal finance. Whether you're dreaming of retirement, buying a house, traveling the world, or simply building wealth, investing is one of the smartest ways to make your money work for you. If you're a complete beginner and investing feels confusing or even scary, don't worry. In this video, I'll break everything down step by step in simple language. By the end, you'll understand the basics of investing and how to start confidently, even if you only have $20 a month. Let's dive in. So first of all, what is investing? Investing means putting your money into assets like stocks, bonds, or real estate with the expectation that it will grow over time. This is different from saving. Saving is safe, but your money grows very slowly. Investing involves some risk, but historically, it offers much higher returns over the long term. The real magic behind investing is compound interest. Compound interest means your money earns returns, and then those returns earn returns. Over time, this creates a snowball effect. Like a snowball rolling downhill, it starts small, but as time passes, it grows bigger and slides faster. Before you invest real money, take time to observe the market. Think of it like planting a tree. You don't plant a seed and expect fruit next week. You give it time, and years later, it becomes something powerful. You can watch major stocks like Meta or Google, or broad ETFs like the S&P 500, using free apps such as investing.com or Yahoo Finance. If you want hands-on experience without risk, many brokers offer demo accounts, which I've linked in the description below. This lets you practice investing with fake money, so you can learn without losing a single penny. This step helps you avoid the emotional mistakes that most beginners make. Be patient. Learning first will save you a lot of money later. Before investing, you need the right foundation. First, only invest money you won't need anytime soon. That could be $20 a month, $100 a month, or more. The amount doesn't matter. What matters is consistency. Also, avoid using leverage, which means investing with borrowed money, especially when you're just starting. Aim for 6 to 12 months of living expenses saved in cash. This protects you from having to sell investments during bad times. Then, set clear goals. Ask yourself, am I investing for retirement? Buying a house? Financial freedom? Your goals determine how much risk you should take and how long you should stay invested. All investments come with risk and reward. Higher potential returns usually mean higher risk. If you're young, you generally have more time to recover from market ups and downs, so you can afford more risk. If you're closer to retirement, playing it safer makes more sense. Here's a simple overview of common investment options. Stocks means you own part of a company. High growth potential, but volatile short term. Bonds means loans to governments or companies. Safer and provide steady income. ETFs and index funds means baskets of many investments. Great for beginners, diversified, and low cost. Real estate means physical property or REITs, which are real estate investment funds. Cryptocurrencies, very high risk and very volatile. Only invest money you can afford to lose. For most beginners, low-cost index funds are the best place to start. Never put all your money into one investment. Diversification protects you when one area of the market struggles. Here's a simple way to begin. Open a brokerage account and make sure it's regulated by a strong financial authority in your country. You can check this on the regulator's official website. Start small. Even $50 a month is enough. Choose broad, diversified ETFs or index funds. Invest regularly, ideally once a month. Stay consistent and think long-term. Avoid checking your investments every day. Markets go up and down. If your investments drop for a while, think of it like a storm hitting a plant you've seeded. You don't cut it down, but you have to take care of it. Keep fees low. Rebalance once a year. Never stop learning. No matter what you invest in, the principles stay the same. Educate yourself, diversify, be patient, and start now. Time is your biggest advantage. If you found this helpful, like the video, subscribe, and comment below. What's your first investment goal? In the next video, I'll be covering how to invest in stocks. Start today. Your future self will thank you.